My name is Richard Harmon. Thank you for joining this coffee break that we host at Red Hat. And today it's a special one for me because I've known Justin Lyon, the CEO of Simudyne, for over 10 years. But anyway, Justin, why don't you introduce yourself and then I'll introduce myself and we can.
Sure. Who's counting, Richard? So I'm Justin Lyon. I'm the founder and chief executive of Simudyne. We are a software company that specializes in developing technology to enable primarily financial institutions to build high-fidelity simulators, for example, buying and selling cash equities. And we'll talk a little bit about how these simulators are used. But in addition to that, we're also expanding into other verticals, as you all know, supply chains and others. So it's a pleasure to join you today and talk a little bit about what we're doing.
Great. Thank you. And at Red Hat, I run the financial services vertical. And it's a very, very large business for Red Hat. And it's also a heavily regulated industry. So some of the tools and capabilities that Simudyne's building, fits nicely into what all financial institutions need to do. So let's start. The one approach and product that has really fascinated me since we first met a while ago was sort of the use of agent-based modeling, and that's your Simudyne Pulse. Maybe you provide a little bit of intro in terms of what Pulse does. That would be very helpful, and get those who are listening sort of understand of what the uniqueness of agent-based modeling provides.
Absolutely. Yeah. So when I when I started Simudyne, it was really to focus on training intelligence, whether human or artificial. And in the early days, we were very much focused on training human intelligence, but now increasingly it's training AI intelligence. And what we wanted to do was to build super scalable technology. And we've filed and have secured a number of patents around what we're doing. But we decided to focus because perhaps I'm an idiot at times. I wonder to simulate the hardest thing you can imagine, which is buying and selling cash equities, futures, derivatives, and so on. And we wanted to do it at millisecond or faster resolution, very much low latency. Every bid, every ask, every amend, every cancel. So we initially partnered with London Stock Exchange Group, and we've gone public with that. We've also worked extensively with Red Hat on the work with the Hong Kong Stock Exchange, which is again also public. And what we try to do with an agent-based modeling approach is to effectively recreate the market in silico, to actually try to capture the market participants as agents, these virtual agents that are calibrated to historic data. So what do I mean by that is we take all the data, the full limit order book data day by day. We then run that through some whizzy advanced machine learning techniques to extract from that data the market participant behaviors, fundamental traders, momentum traders, deep liquidity providers, market makers, and so on. Mm-hmm. And then these virtual traders start buying and selling against each other. And if we've done our job well, and we have, then what happens is you capture the price formation process to such a level that the synthetic data that's generated looks and feels like real market data. We can talk more about that if you want, but that's really the punchline. It's sometimes referred to by the regulators as a glass box approach. It's a very explicit, causally grounded understanding of the market activity, and then the generation of all sorts of counterfactuals from these virtual agents buying and selling against each other.
Great. Yeah, as you know, I'm a huge fan because I have a background in that space. So
yeah, I know you've been doing this for years. Amazing.
Yeah, the work you guys have done is just tremendous. And how about sharing a little about sort of the reasons for for a customer or a quant or a risk manager, what are the reasons that they would want to use this kind of platform?
I think they would want to use it for any downstream ML workflow. So it could be for using it for either offline or online reinforcement learning. So if you are, for example, looking to execute a large parent order and want to come up with a bespoke or custom algo so as to minimize market impact, that would be a perfect use case. For the exchange themselves, it would be things like liquidity risk management. So understanding in the unfortunate event of a member default and you had to liquidate large positions that might represent several days worth of average daily trading volumes, you obviously want to do that in a sensible way. So having a simulator that looks and feels like a real market allows you to test all of these different ideas, to have the AI, the reinforcement learning, learn novel execution strategies without putting any capital at risk, or for a venue, the ability to liquidate those positions and see the likely market impact, both permanent and transient, without, again, any capital at risk. So, and I think also for hedge funds, it's around preserving alpha. So if you're, an asset manager or hedge fund, obviously you want to execute your order so as to minimize your impact and with an acceptable level of market risk. So being able to have such a simulator, you can kind of imagine it sort of slots in between your historical replay. That's, everyone already does that. And then rather than going straight to the market and having to do the statistical test that might be 6, 8, 12 weeks worth of work, you can use our simulator in between that to get a realistic response. So, because remember, when you trade in our simulator, the other market participants respond to you as they would in the real world. So it's very much a dynamic and responsive and reactive simulator. And that's what allows us to see the emergence of impact, market impact, in a realistic way.
Yeah. Okay. And if customers were going to use this, can they run anywhere on any cloud or on-prem? What are some of the options they have?
Yeah, that's a good question. You mentioned regulated institutions. Absolutely critical to them is the ability to have flexibility. And you and I have talked about it. I think you've even written numerous papers about the importance of not getting too much cloud concentration risk. And years ago, when we were looking at the various different technologies out there that would enable us to containerize and deploy our technology, we decided to go with OpenShift, Red Hat OpenShift, primarily because it sort of gave us the ability. If I can maybe like three reasons why. So I think the first one was the ability to scale our workloads, arbitrarily. Computational simulation is expensive, and with Red Hat OpenShift, we get this elastic ability to sort of scale up and scale down on demand. So that's beneficial for us because it means we can run the simulation super quick. It's beneficial for our customers because they can do it in a cost-effective way. And then another thing, and it's sort of key to one of the reasons why so many people are using us, is we have a patented method for ensuring deterministic simulation. So when we combine our patented methods with Red Hat's technology, it allows us to have reproducible containerized deployments across any cloud that we want. So, we certainly support AWS, of course, with Red Hat OpenShift on AWS. I've done a lot of work with Google as well, the other cloud providers, Azure as well. But also increasingly, we're finding that people sometimes want to bring this on-prem, especially some of the hedge funds and the big asset managers. And so by containerizing everything in OpenShift, it makes it extremely simple, like a day or two, to move it from one cloud provider to the next cloud provider. So I think that ability to have that flexibility to move between different cloud providers and even on-prem is the second reason. And I think the third reason why we selected it was just, security, enterprise security out of the box. That's sort of a key benefit of OpenShift and what's called this role-based access control that we really leverage that a lot. So it allows us, many of our simulations have to have sort of separate environments. So you might have your dev environment, where the quants are going to be accessing it. We expose a lot of things through the Jupyter notebooks, which comes with OpenShift, as you know, and so the quants need to have access to that environment. But then obviously when we move it into production, it's much more hardened environment that, it's, very much fewer people can have access to that. So we have to really make sure that the roles are carefully designed for IT versus quant versus the chief risk officer and his team, his or her team. So, this ability to have those sort of three benefits: the elastic compute, the ability to migrate and run on-prem or whatever cloud provider, and then just the enterprise security. That's sort of why we chose Red Hat OpenShift.
Oh, excellent. So you're one of the most innovative AI companies around, and you're doing some new research and new focus. We only have a couple minutes, but if you could sort of highlight a little what you're looking at to do, and I'm fascinated and intrigued by where this is going, because I think it's laying the groundwork for approaches that no one is doing at all in the marketplace yet.
Yeah, I think so I sort of started saying about training AI, training intelligence. And so we see it in sort of three different streams. So the first stream is building high fidelity simulators of what are referred to as complex adaptive systems. That's financial markets, supply chains, and so on. Very similar to building high fidelity simulators of cars driving on roads so that AI can learn to drive the cars safely, or building spatial simulations for robots to navigate rooms. We do exactly the same thing, but in cyberspace, in financial markets. And when you have that high fidelity simulator that generates that synthetic data, that unlocks the second thing, which we're now doing and launching next month in April, is the ability to have a foundation model. So we're training, rather than a large language model where it predicts the next word, we're developing a large market model which predicts the next bid or ask. And this black box approach, so remember, agent-based models are glass box approaches. You capture the price formation process, you generate the synthetic data, then you bind in your foundation model. And we use a variety of different techniques and combine them together, a combination of diffusion and autoregressive techniques. But the punchline is that foundation model, you train it on the historic data that you get from the venue, the full limit order book data going back several years. But in addition to that, you take the simulator and you generate counterfactuals. So you're creating data streams that are super realistic, but that the foundation does not exist in the real world, hasn't been observed yet. So maybe you want to see what happens when Tencent experiences a flash crash, if you're looking at trading Tencent, for example. So this simulator generates a vast corpus of synthetic data that we combine with the historic data. And that then allows the foundation model to have a much broader understanding of the possibility space. And that unlocks the third thing, which is a world model. And that's where, much like humans, we have a mental model, a world model in our brains that makes predictions on an ongoing basis. And hopefully, if we've learned from our experience, we make better predictions over time and we navigate our real world. Similarly, the AIs, when they have this simulator generating that synthetic data, feeding that into the foundation model, it allows the world model to sort of understand reality a little bit better and to effectively become a resilient AI. That is, it's being exposed to things that it hasn't observed in the historic data, and it's much more likely to succeed in the real world as a result. So that Pulse agent-based model, we call it Pulse ABM, the simulator, coupled with Pulse foundation model, Pulse FM, those two things together unlocks the world model. And that's the holy grail. That's the difficult thing. And if you look in the AI space, there's all of us companies out there, Jan LeCun with his new startup and Silva with his startup. They're all working on this idea of unlocking world models, but they're primarily focused on the spatial world, whereas we're focused on financial markets, complex economies, energy grids, and that sort of thing.
Okay. No, excellent. And very quickly, when we're closing, first, thank you. But I thought maybe you'd share with everyone the fact that they can actually try these models.
Yeah, so thanks to a variety of our partners, Red Hat included, we've been able to make it freely available. So if you go to pulse.simudyne, I think we'll put the link in the chat below, pulse.simudyne.com, you can access the simulator and run experiments directly from our API. So it integrates, we use MCP, so you can integrate it into your AI of choice, like Claude. From Claude, you say, hey, I want to trade Tencent, here's my order, or generate me a bunch of synthetic data. I want to use it for my offline reinforcement learning training, and all of that's freely available from pulse.simudyne.com on the 50 most traded symbols for Hong Kong. And very shortly, we'll be also making available LSE and some other venues as well, which I'll be talking about in the future. So yeah, that's all available. And within a few more weeks, the foundation model will also be publicly available. And just check pulse.simudyne.com for access.
Wonderful, wonderful. Super exciting, all the work you're doing. And thanks for this chance for a quick coffee break.
My pleasure. Yeah, couldn't have done it without Red Hat. It's been a wonderful experience working with you guys.
Appreciate it very much. We've enjoyed the journey. So anyway, thank you everyone for joining. That's the end of this coffee break. Thank you for listening. Hopefully you've learned some interesting stuff, things that you should play around with and touch and learn. I think this is the future of doing real heavy quantitative analytics in capital market space and AI, as well as other areas like world models. But thank you very much.
My pleasure. Thank you.